when I talk a bit more about the banana zone where we are. So here's Bitcoin. Last time Trump came in, it rallied into the end of the year and then corrected 27%. And then it just went up. And alts outperformed because alt season happened. Now, that was driven by exactly the same factors. Trump getting in, dollar went up, tariffs, oh my God, and rates went up. Oh my God, tariffs are inflationary. What happened as soon as Trump got in is he said, we don't want a strong dollar, and rightly so. I think they'll say that again. And the dollar weakened and rates went down for the entire next year. Even though the Fed were raising rates in 2027, the long end was going down in yield. That setup is likely to happen again.
A massive Bitcoin rally could be on the horizon, fueled by Trump's potential comeback and a weakening dollar. That's the prediction from macro expert and Vision CEO Raoul Pal. Pal is optimistic about the markets, highlighting a massive wave of money poised to boost the economy. With $775 billion in treasury funds, potential cuts to reverse repo, and the possible end of quantitative tightening, nearly $875 billion in stimulus could soon flood the financial system. Pal believes this could lead to lower interest rates, increased economic activity, and significant growth opportunities, particularly in crypto. Stick around until the end of the video to hear Raoul Pal's full analysis of the upcoming market cycle and why the next phase could bring incredible opportunities for investors.
Hi guys, hope to see you guys at Dubai Token 2049. We have exclusive 10% off the limited super early bird tickets. Click the link below. This pass will grant you access to speaking sessions, networking app, exhibition hall, daily networking drinks, and also included breakfast, lunch, and coffee breaks, all included the package. I'd love to see everyone there. Peace out.
The year has been great. The Everything Code has completely nailed it for us. What we're seeing is the market kind of recalibrating, like, oh, they're never going to cut rates again. Well, you know, if you're armed with the Everything Code, you're going to fucking have to. Because if not, you'll lose control of the bond market, in which case you have to use yield curve control, which is the same as more cowbell, which is more stimulus. So we know that they're going to bring it down. He's already said he's still biased to do this. He says, well, we're kind of neutral now, but we want to bring rates down. And the dot plots say they want to bring rates down, but they've raised the bar a little bit for this. So that means any weaker data gives them the opportunity to get rates down. As rates come down, it lowers the mortgage rates, which actually lowers inflation. So they want to do that. The other thing that I think Jay Powell wants to do, and certainly Scott Bessent when he comes in, is they need to weaken the dollar. The dollar plus rates has caused financial conditions to tighten, which is our global liquidity. And I'll come onto that a little bit later when I talk a bit more about the banana zone where we are. But we've had actually financial conditions tightening somewhat. And I think they're going to unwind that. So I don't think there's anything that's not expected. The other thing nobody's actually thought through is Elon is basically saying he will shut down the government in order to get rid of the budget they were trying to pass. You know, it's like this thick. It's fucking nonsense. So he's going to try and fight that fight, which means there'll be a government shutdown. Will it be the shortest or the longest shutdown? I don't know. But Auntie Janet has 775 billion in her bank account to spend, which is a net injection of liquidity from the Treasury General account. That will likely be released. People haven't figured this out yet. Massive liquidity. Jay also said that he's going to cut the reverse repo a little bit further than expected. And the idea is to drain the reverse repo and put it into the banking system. That's about another 100 billion. So there's about $875 billion of stimulus that's potentially out there to come. If they cut the reverse repo, they're likely to end QT, because if not, the banks will end up with no capital. So QT may end as well. So if we've got two things wrong. One is we expected inflation to be a little bit lower by now, but because rates have not come lower, this kind of weird duality issue. But rates are relatively low anyway. I mean, inflation is relatively low, but I think we'll see rates come lower. The business cycle, our forward-looking indicators are screaming higher. I'll show you that later. But ISM is still subdued, and we need ISM to go up so we can all earn more money, because the business cycle is what drives us. We're not tech giants who can just print money out of thin air by building AI tools. Most of us have to earn something and make something for a living, and we need demand, and that's not there yet. But overall, hopefully I've really helped you guys. I've been trying to unfuck your future. I've been trying to educate you guys, help you. I've been trying to help you develop your own frameworks and understanding. I still see the panic that rolls around. I understand. All of our wealth is in this trade. Mine too. I'm no different to you guys. But you can't panic on every 5% pullback. It's just going to be top. Somebody posts something on Twitter. Oh my God, it's all over. I put a poll out. My mind is blown. I put a poll out and say, what do you think is the peak of the cycle? 65% of people think the cycle peaks at 150,000 Bitcoin. Maybe I'm wrong, but that sounds like PTSD to me. It sounds crazy considering what's happening in US politics, regulation. It sounds crazy when all the liquidity still lies ahead. It would be ridiculous versus any other cycle. But I could be wrong. I've been wrong in the past, I'll be wrong again in the future. But I can see the PTSD and the fear because it matters so much to everybody.
Raoul Pal describes crypto as the fastest adopted investable asset in human history, projecting 1.1 billion active wallets by the end of 2025. He calls this an unprecedented accumulation of wealth, fueled by liquidity, a driving force behind market movements. Pal believes all indicators point to crypto outperforming every other asset class as the market enters what he refers to as the banana zone. He cautions investors to brace for parabolic price surges, marking a historic opportunity unlike anything seen before. Now, let's dive back into Raoul Pal's analysis as he delves deeper into these insights.
I know it's important to everybody. I know this is the biggest bet everybody's ever taken in their entire careers. As we go into next year, I will be trying to guide you on just taking some goddamn lifestyle chips off the table. I don't know when the right time is. And you'll be panicking because the market will fall 20%. You're like, oh my God, I've missed the opportunity. You haven't. I mean, the market's up so much from when most of you guys bought it. But we'll take some lifestyle chips off and you guys can then calm down. But the banana zone will help us. The banana zone will move to the banana singularity when everything goes up at the same time. And then you'll take some money off the table and you will hate doing it, but you will thank me at some point. And then we'll figure out the rest of the cycle as we go. So this is the chart you're all worried about. You're like, oh my God, we're all going to die. I mentioned this on Twitter. You're over-indexing on the fact that liquidity is going to draw and it will bring price down. Are we having it now? I don't know. I don't think so. I think we actually have another push into year end because this chart suggests that it actually goes into year end, but I'm not expecting perfection. So maybe this is the drawdown. But it looks terrifying on the chart. But we've seen all of this before. And let me show you. So here's Bitcoin last time Trump came in. It rallied into the end of the year and then corrected 27%. And then it just went up. And alts outperformed because alt season happened. Now that was driven by exactly the same factors. Trump getting in, dollar went up, tariffs, oh my God, and rates went up. Oh my God, tariffs are inflationary. What happened as soon as Trump got in is he said, we don't want a strong dollar, and rightly so. I think they'll say that again. And the dollar weakened and rates went down for the entire next year. Even though the Fed were raising rates in 2027, the long end was going down in yield. That setup is likely to happen again. So we're getting into this perfect setup that whatever the correction is, things will rally. Now, it was Bitcoin that had the bigger sell-off. Other things like ETH sold off less and then rallied back in that period. So we don't know what happens. Let's zoom in here on the chart of Bitcoin. There it is, the Trump victory, this rally in Bitcoin, the correction, and then it did 23x. Yeah, 23x. Are we going to do 23x? Absolutely not. Are we going to do 5x from here? I don't know, probably. You know, my base case is 250 worse, 500 plus in a blow off top market. Like, I'm not saying it's going to 500,000. I have a probabilistic framework. I think it's possible, but I don't think it's the most likely thing. So, each time we've had these kind of transitions into the new government, we have this breakout, and that should continue higher. Don't see why this can't go 200,000 plus. I mean, it would look pretty basic on this chart, even if we have a law of diminishing returns in the Bitcoin cycle. So for me, it feels good. If I look at the global M2, which is another way of measuring liquidity, look, every time we get to election year, you have this tightening of liquidity. We had it in 2016, and then 17 it expanded. We saw it in 2020, then it expanded, and now we've got it again. It kind of retests the breakout and keeps going. Global liquidity is actually driven by the dollar. So it is going to be about the dollar, and things can change, and I could be wrong. So the dollar is the main thing. The dollar last time, it's been following the 2017 election cycle really well, 2016, 17, and it should say this last leg in the dollar, next few days and stuff, should be the end of the dollar rally, and then that will ease up global M2.
Google's new quantum chip, Willow, has raised concerns about the future security of Bitcoin and other cryptocurrencies. This revolutionary chip can perform calculations in minutes that would take today's fastest supercomputers billions of years to solve. While Willow itself cannot currently break encryption, experts warn that advancements in quantum computing could one day allow hackers to bypass Bitcoin's security measures. The development of Willow signals a step toward larger-scale quantum machines with significantly greater power. This means Bitcoin and other cryptocurrencies will need to evolve to remain secure, potentially by adopting quantum-safe algorithms designed to resist attacks from quantum computers. For now, the risk remains theoretical, with experts estimating it could take 10 to 15 years before quantum computers pose a serious threat. However, this timeline highlights the urgency for the crypto industry to prepare for these inevitable advancements. While some see quantum computing as a potential benefit for enhancing cryptographic security, others emphasize the need to address its risks to Bitcoin's ecosystem sooner rather than later. As the technology progresses, it will be increasingly important for Bitcoin to adapt to ensure its long-term resilience. What are your thoughts on this development? Share your insights in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.